Yo, what's up, everybody? It is Tuesday, July 5th. I hope you had a really nice July 4th weekend. If you celebrated that here in New York, actually, we had gold star weather for the first time in many years, like all 3 days of the July 4th weekend. Saturday, Sunday, Monday, it was beautiful. Last year it was rained out. Actually, last year, all the 3 big summer holidays, Memorial Day, July 4th, and Labor Day, they were all rained out. So we had a great July 4th weekend. Anyway, folks, I don't know how you can get much better than the call I made. I'm not trying to pat myself on the back, but I'm trying to explain to you or highlight to you how these fiscal flows really affect market behavior. Remember, last week I said we would rally into Friday because Friday was July 1st. That was a big first of the month government disbursement day. Actually, I'll give you the numbers on that in a second. And I said, so Friday should be a positive day. It's tradable. And that should flow into early this week. And today, actually, we started off really negative, but we ended up positive. Not the Dow, but the NASDAQ had a nice rally, and the S&P closed positive. So let's go over the fiscal numbers. Okay, Friday was a big day. As I said, that's July 1st. The first of the month is the big government disbursement days. That's you get Medicare, Medicaid, military pay, veterans benefits, disability, plus last Friday was also a Social Security payment. So it was a 120 billion fiscal flow day with a net flow after taxes of 90 billion. So we are starting off the month of July with a 90 billion deficit. That's a good thing. Remember, deficit equates to the addition of the financial balances of the non-government, of the economy. So that was a net injection of 90 billion into the economy, free and clear money that went in. So that was very positive, and therefore not a big surprise that we had a good rally on Friday. And then it looks like the market came in with a lot of short selling, but that did not hold. There was still a positive liquidity flow that carried over from Friday, and we rallied. Not the Dow, as I mentioned, but the Dow managed to make back a lot of its losses, but a nice rally in the NASDAQ, and S&P closed positive. Commodities were down. Gold was down hard. What we're seeing now in gold is heavy speculative liquidation. I suspect, and I went over the CFTC commitment of traders report on Friday. That was for the week ending June 28th. It looks, we're pretty close now to large speculative funds flipping their position from net long to net short. I mean, we haven't seen that in a long time. So we're getting a really significant amount of liquidation of the speculative element in gold and silver. Now, that doesn't say anything about timing of a turnaround, but in the big picture, if you're going to be a contrarian, you wait until the speculative component sells off and bails out of its position. And, looking out longer term, it looks like very positive. So this might continue for, next couple of weeks or something. But, again, if you step back, if you take a longer term perspective, now's the time to be accumulating and just have some patience. Let me now talk a little bit about oil. Oil, again, down below $100 a barrel. Folks, there was an article, Reuters wrote an article today about how, the White House, the Biden administration has been really drawing down the Strategic Petroleum Reserve. It is at the lowest level, I think, since 1986. But that oil is being exported. I mean, it's exactly what I've been telling you guys, that we are net exporting our surplus, and that's one of the reasons why Gasoline prices are staying high and distillate prices are staying high, diesel fuel and crude. This crude sell-off, I didn't see anything. Again, I'm going to mention the weekly CFTC commitment of traders. I didn't see anything in that CFTC report that showed a reversal in the position held by oil producers. They are still net long oil futures. And if you go back to April, early April, when the price of crude WTI dipped below $100, that was the last time we dipped down here, producers were heavy buyers, futures. And I suspect they are there again. So I don't see the price dropping much. Interestingly, I was looking at the spreads in the oil market today. You know, still very much in backwardation, which means that the nearby price, the spot price, is trading at a premium to the deferred contracts. And even though we had like an $8 drop in crude prices today, that spread hardly budged at all. I mean, we're still like around a $3 premium to the front month. So I think that's telling. I see it bouncing back up again from these levels because if the producers were there buyers in April, I suspect they're going to be buyers now. Let's go back to the fiscal situation. So we're starting off the month with a $90 billion budget deficit for the federal government. That's good. That equates to a $90 billion net addition of liquidity to the or addition to the financial balances of the non-government. But let's do the math. All right. In April, the government ran a surplus of $324 billion. Okay, so that was an extraction, that was a drain of $324 billion from the economy. Then in May, they ran a deficit of $86 billion. In June, we just finished June, ran a deficit of $54 billion. Okay, so combine those two, 86 and 54, that's $140 billion added back in. But remember, they drained out $320 billion, $24 billion in April. And now we're starting off with July with a $90 billion. So you had $86 billion and $54 billion is $140 billion plus $90 billion. So $230 billion has been added back in, but we're still down like $90 billion. Okay, from the $324 billion that was drained. You got to put that back in. The problem is now we had the big first of the month disbursement, like I said, boom, $120 billion, $90 billion added in net. The rest of the month, with the exception of we got 3 more Social Security payments, I think one is on the 10th, one is on the 17th, and one is on the 24th. With the exception of those 3 days, the rest of the days are going to be net drain. So we're not going to see much increase in the deficit for this month. As a matter of fact, we could actually see that $90 billion trickle down to maybe something like $70 billion. And we're not getting that liquidity added back in. We're not getting those financial balances recovering from the hit it took in April. So I could totally understand the market rebound based on Friday, and I told you that was going to happen, right? And I said it would flow into early this week. And I also understand that sentiment is really, really negative. So, you got to consider that as a contrarian indicator. And that's good if you're looking at it, from a bullish perspective. But we're just not going to have the fiscal flows that we need, I think, to sustain this rally. So I think we're going to see a rally that fails, maybe as early as midweek. Okay, let me mention now the banking data, because actually the banking data, and this was the latest banking data, was for the week ending June 22nd. That's actually very good, very strong. We saw big increases in loans. That would include commercial and industrial loans. I think I even spoke about this on Friday. We saw big increases in consumer loans. As a matter of fact, the increase in credit card and revolving credit was the biggest in 4 years. All right, so we had a single week increase in credit card loans, the biggest in 4 years. So I wouldn't count the consumer out, and that is an offsetting factor to the decline in the fiscal situation. I mean, banks are supplying credit. It looks like, households are still tapping into that credit, so that could sustain consumption and investment for a while. So I don't think the economic contraction, we will see almost 100% certain we will see a negative second quarter GDP, and that, of course, that's like the accepted definition of a recession. We're in it. But I don't think it's going to get seriously negative as long as that bank credit continues to flow. Now, like I said, July, this is probably as good as we're going to get in terms of the fiscal flows. This 90 billion deficit, it'll probably be whittled down a little bit by the end of the month because, every day now is a net drain because of taxes, with the exception of, I said, there's only 5 times a month, the 4 Social Security payments, and those are really small net increases. And the big one that comes on the first of the month, and we had that, that's done. That happened on Friday. So I think this is the best we're going to get from a fiscal flow standpoint for July. Now August should be a big month because we get a quarterly interest payment, and that'll boost the month up pretty nice. So I think we creep into September. September, we got a quarterly corporate tax payment. I mean, the fiscal just doesn't look good. It just doesn't look good. And like I've been saying, until we get the automatic stabilizers triggered. And again, I want to say that's the ugly way to do fiscal. You don't want to do fiscal expansion by having people lose their jobs and becoming unemployed. I mean, that's a terrible, terrible way. But we have the automatic stabilizers. Right now, actually, I don't see any sign in the daily unemployment benefit flows of a slowdown in the labor market. I mean, that if we're looking for unemployment benefits as a kind of a fiscal support, that's not happening right now. So it's bad, but it's good. It's bad because we're not going to get that additional fiscal support that we need. But it's good because I think it says that the labor market is still strong. We're gonna get the job number on Friday, so we'll see. I think they're looking for something like a 360 or 390,000 increase in payrolls. That would be very, very strong. But again, I don't see any sign in daily unemployment benefit flows that indicate a worsening. I was talking about that a couple of weeks ago, that it looked like it started to trend up, but then it's dropping back down again. It's very low, very low. So we're just going to kind of bounce along here because fiscal is just not strong enough. And again, July, we just saw the best we're going to get on July 1st on Friday. We got some follow through in the market, which is exactly what I said was going to happen. But then I think we probably run into, a stall. It's going to stall out. All right, folks, that's it for today. I hope everybody had a great weekend, and we're back now in the summer market. All right, see you tomorrow. Bye.